Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep sending us your comments and queries on our live feed and we'll have them addressed towards the latter half of the show. Before kick-starting and bringing on board our guests, let's see what the global handover looks like. Private payrolls data shows the US labour market remains hot. 2.35 lakh jobs added in December, well above estimates. Stocks slump. Indices remain on track for a fifth straight week of losses as fears of further rate hikes rise following the job surprise. Stocks in the Asia-Pacific opened largely higher despite a sell-off on Wall Street. Samsung flags demand concerns as quarterly profits slumped to an 8-year low. The SGX Nifty, meanwhile, indicates a lower start for the Indian market. And as rural demand continues to drag while urban market sustains momentum, what should we expect from FMCG companies' Q3 performance? Stocks in the spotlight today are MTAR Technologies, IDBI Bank, Muken Limited and Kewal Kiran Clothing. Okay, let's get going and bring on board our first guest today. Kaustubh Pavaskar of Sharekhan joins us to talk about the FMCG space. Morning, Kaustubh, and thanks for joining in. Before we talk about what to expect in Q3, why don't you tell us about the demand landscape? Rural has started seeing some green shoots towards the second half of December, but largely it's still pretty much lagging behind urban momentum. So talk to us about which categories are doing better, which companies thereby could do better this time around.
Yeah, good morning, Karunya, and good morning, all the viewers. So rural demand, some green shoots were seen at the beginning of the quarter, and that was mainly because of the high festive demand. So in Q3, there would be 2 to 3 triggers that will drive the demand for the consumer good companies. One, high demand during the festives. Second, slightly good demand for the winter products. And third, the urban demand continued to remain stable. Rural, as I said, that there were some bit of good green shoot during the festive because of the festives, but because of the high inflation, the demand environment has surged as consumer sentiments continues to remain lower, has not improved. So we believe that now we have seen the consumer sentiments, improving in the rural market because inflation levels are lower. Second important factor is that the Rabi production is expected to be better, and that is something which will lead to higher income for the agri economy, and that will be another factor which will drive the sentiment. And also there are expectations that government might provide some stimulus during the upcoming budget for the rural economy. So all these factors will help rural demand to improve in Q4, and maybe that will continue over the period of time. But in the near term, for Q3, we should expect sequential improvement in the volumes, but that is mainly because of the stable urban demand. Some of the pricing actions what the company took in key categories, for example, soaps, edible oils, we have seen price correction because of the decline in the commodity prices, and there we have seen improvement in the sequential improvement in the volumes and also the festive demand. So all these factors will help sequential improvement in the volume. So that's why we have seen that companies like Marico, Godrej Consumer Products, they are expecting low to mid-single digit kind of a volume growth compared to the volume decline in Q2.
Right.
So we believe that it should continue to improve once rural demand is back on track. So we expect this momentum to continue in the quarters ahead.
Okay. But if we look at FMCG sector's performance up until the September 22 quarter, Q2 of FY23 was the fourth consecutive quarter with negative volume growth for the FMCG industry. So, like you said, some of these companies could see sequential growth in their volumes. But overall, do you think we will still remain under, or is this industry expected to be back in the black?
See, first off, there was also the impact of the high base. So now the base effect is not there. So now we have a normalized base for Q3. So that also we need to take into consideration. Obviously, the demand is the important factor, and as I said, that rural is yet to get to see substantial improvement. So that is one factor which will help consumer good companies to see strong revival in their sales volume, and that is what even companies are anticipating. And I've already given what would help drive the rural demand. So if rural demand come back on track, we should expect volume growth of low to mid single digit to further improve in the quarters ahead. However, we believe that it is going to be the gradual improvement. Also, if commodity inflation comes down, it helps consumer good companies to pass on some more benefits to the consumer. So that also helps volumes coming back on a track for the consumer good companies. So these are some of the factors. Commodity inflation is coming down, so even that will drive the sentiment. So these are some of the factors which will help volumes to come back on track. However, it is going to expected to be gradual. So Q3, we are expecting revenue growth to be mix of price and volume. However, pricing will continue to remain on a higher side compared to volume. Over the period of time, we should expect volume taking over the price, maybe in another 2 to 3 quarters once recovery is there in the rural demand.
Okay, but couple of analysts that we've interacted with and who've released their previews for Q3, they're saying that most commodity prices have not declined as per the expected rate, barring, I think, palm oil. But if we look at the challenges and the tailwinds right now, of course, subdued profit margins, weak rural demand, inflationary scenario has cooled off, but not as per expectations. So in a time like this, will price increases and potential premiumization trends that are playing out in some companies and some select segments, can that offset the pain?
Yeah, so we have seen that premiumization is helping most of the companies, and even Marico, in their update, they have stated that the premium categories at food business continues to do well, and there they are seeing strong double-digit growth. In fact, Marico has also mentioned that these two businesses will scale up fast, and it will add to the revenues and their profitability of the business over the period of time. Same is the case with company like HUL, where their premium categories continues to do well, and it is supporting to their overall revenue growth. So obviously, premium categories and the steady demand in the urban markets will continue to offset the slowdown in the rural demand. But yes, once the rural is back on track, we should expect this growth momentum to improve, and time will say, because if crude prices continues to fall, there would be further decline in some of the related commodities, and even the inflation would be lower. So that will help demand to come back on track. But as I said, it is going to be a gradual recovery. It is not going to happen immediately. So once rural is back, there should be a gradual recovery in terms of volumes in the quarters ahead.
Okay. So when it comes to the recent buying that we've seen in the FMCG companies, FMCG stocks, do you think it's something that's more of a buying that's happening at lower levels, or do you think that the fundamentals look intact and maybe in the next 2-3 quarters we will see a meaningful recovery in earnings for these FMCG companies?
So if you look into some of the FMCG stocks, obviously they have underperformed to the broader indices, and they are trading at lower to their historical averages. If we consider last 4 to 5 years averages, some of the stocks are trading at a lower level. So I think this provides an opportunity to enter into the quality stock. Plus, the recovery will definitely play. And normally in the volatile market environment, defensives are always preferred. So I guess that's why we are seeing good bit of momentum in the FMCG stocks. But obviously fundamentals and the recovery will have a higher distant preference, and that will suggest or that would be some important factor to pick up some of these stocks. So in this space, we continue to like stocks like Marico, Dabur India, Hindustan Unilever, Britannia Industries, and Nestle, which we believe that are relatively expected to perform well compared to some of the other FMCG companies, because for them we believe that the triggers are in place to see better growth in the quarters ahead. But for a sector as a whole, once rural is back on track and commodity inflations, comes down, I think that would be key trigger from the earning visibility point of view, and that should happen over the next 2 to 3 quarters once the inflation is down.
Okay, thanks much then, Kaustubh, for joining in and sharing with us your assessment of the FMCG space and the fundamentals of a host of companies. Okay, let's shift gears and talk about the technicals of the market. Raja Venkatraman is here with us. Good morning, and it's a weak handover if we look at the US markets, but Asian markets have smartly bucked that trend. SGX, however, we had flagged off, is in the negative. So what kind of a session do we expect to have today? Again, will we see a lot of intraday volatility?
Yeah, good morning, Karunya. So the entire premise as we began the year was to begin on a positive note, but that's not the case here. And once again, on the back of FOMC we are showing some weakness here once again. And what I'm feeling is that there were important support zones around 18,000 and at 43,000 on Nifty and Bank Nifty respectively. And those levels have been given away. And as we begin the next week of this expiry week, we are already beginning on a flat note. So there is no signs of encouragement here. And the overall mood is right now on the neutral side. I won't say it is yet bearish. So I would still wait for a levels around lower levels around 17,700 on Nifty and 42,000 on Bank Nifty to be broken to once again enter the bearish territory. Right now, what we are seeing is a reaction to the global cues. But when you take into factor the option data, that's where the big boys are playing, and they are continuing to have a call writing approach, which indicates that any rally which we witness is going to experience supply. So as a trader or even as a short-term investor, you have to keep booking profits as a short-term investor quite quickly rather than expecting a larger return. And as a trader, you should look to trade on both the sides of the play. Otherwise, you are going to get stuck with some positions and it's not going to be pleasant. So that's the overall outright approach which one should maintain for January, because I definitely feel that this month is going to be a volatile one. And if you got to play the game, then you have to be ready to trade on both sides. And I feel that till the levels which I mentioned are compromised, one should continue to maintain a buy on dip and sell on rally.
Okay, so buy on dip, sell on rally is the mantra right now, given the way the market is panning out. Let's bring on board some of the stocks that are in the news and could also well react to that news flow. The first name on my list today is IDBI Bank. SEBI has permitted government shareholding in the bank to be reclassified as public after the stake sale. And SEBI has also said that the government's voting rights in IDBI must be capped at 15% after the stake sale is done. Now, IDBI Bank, while the last 1 month has been largely flat or a tad subdued, in fact, if I may call it that, the stock has nearly doubled from its 52-week lows, right now trading close to 55, 56 rupees levels. Do you think it's a good time to enter, or should one, if at all, has already entered, tread with caution?
Yeah, I would agree with the later part of your commentary, where it is right now tread into some important resistance zones around 62. So it could experience some supply at those levels. So now, considering the current scenario, the momentum is definitely looking positive. So as an immediate play, you could consider a level of around 62. One can look to participate at current levels, but then it definitely has a very strong supply zone at around 62. So if you are looking to play this counter to the upside, then your targets will be towards 62 and stop loss will be at 50.
Okay, all right. Moving on to our second name for the day, MTAR Technologies. Nippon Life India has raised its stake by over 7% from what they were holding right now, was sub 7%. And now after the fresh acquisition of 30,000 shares via open market transaction, the shareholding has gone beyond that 7% mark in the company. Talk to us about how the fundamentals of MTAR are playing out and how should one approach this one?
Yeah, MTAR definitely had a good run since its listing in 2021, where through a series of acquisition, they showed that they were here to stay. But then come October 2021, the whole bullishness evaporated and that scenario continues to remain. Right now, there are some positive news flows which are coming in, but the prices do not depict that kind of movement. So I would definitely hold on my decision to enter into the stock at the current juncture. If I were to participate, it will be above 1800.
Okay, all right, point noted. Moving on to the next stock on our list, which is Muken Limited. They've sold a 46-acre land in Thane for close to 800 crore rupees to an infra company called AGPDC Infra 2. Now, some positive momentum has been building up on this counter for the last 1 month. It's, I think, added about 15% on the upside, despite very, very wild moves coming by in that short time frame of 3 to 4 weeks. Talk to us about the way forward that's likely to be for Mukand.
Yeah, so the overall prospects in this counter seems to be developing to the upside. I can see here that there is some volume also building up on in the last few weeks. So it is an encouraging sign, no doubt. However, one should be aware that right now the levels where it has tread into around 145 levels is a good supply point, and there could be a lot of exits from here because the movement to the downside began in April 2022, and right now the point where it has reached could be a good exit point. If it is able to overcome 145 levels, it's able to give a nice closing above 145, then it has got potential to move towards 225 within the next 1 year.
Okay. Well, some more small caps on our radar today. The next one I want to flag off is Kewal Kiran Clothing. They've signed a strategic pact with BCCI as Indian cricket team's official partner. Their flagship brand Killer, the name of that brand will be displayed on the right upper chest of Team India's jersey, and the agreement lasts till 31st May 2023. Now, of course, this is a very, marketing-driven sort of a news trigger where they've clearly spent a fair amount of money to get that sponsorship for India's team. But let's talk about Kewal Kiran's chart first. How is that looking? Because again, it has ended the last 1 month on a positive note with a very, very, negligible sort of gains. But again, a lot of volatility has been witnessed on this counter as well.
Yeah, so the later half of 2022 for Kewal Kiran has been nothing short of a dream run. And the overall prospects of this counter looks definitely encouraging considering the current market scenario. The trend seems to be defying the current market environment. So yes, the stock is looking positive. One could look to buy at current levels, use dips towards 460 to 470 for additional buying in, with a stop loss below 440 for a target of around 800 within the next 1 year.
Okay. All right. Let's address some of our viewers' comments and queries as well. Narayan Venkatesh is asking when we can expect Tata Motors to cross 450, if at all that can happen this year, he's asking. It has actually been about four and a half months where, since the stock came back to those levels. Do you think it can happen anytime soon?
Yeah, so like you rightly mentioned, it's going to take a while, and currently it is under some surfeit of consistent supply, which is emerging at higher levels. Even the last time we had discussed that the chances of recovery in the stock seems limited as of now. So any holder in Tata Motors should exit below 370. Fresh additions can only be considered above exactly 100 points above, which is 470. Till then, it's going to oscillate in a range-bound action, which we have been seeing almost for the entire 2022. So I would not be a buyer in Tata Motor, but you could definitely use it for some intraday trading positions.
Okay, all right. Moving on to the next question. This is from Sujit Nair, who wants your view on JSW Energy. Now, JSW Energy has been very range bound for the last 5-6 months in that 330 to 280, 270 level. That 50-60 rupees range is something that it's been hovering in for the last many months now. Do you see it breaking out of that zone anytime soon?
Yeah, this stock too is in a range-bound condition. There is no signs of bullishness nor bearishness. So basically, this stock is coiling into a trend, and at the moment, it would be an avoid from my side.
Okay, so an avoid coming in for JSW. Now, Bajaj Finance and Bajaj Finserv, both of these counters tanked yesterday after the Q3 update, failed to impress the street. Several people, even on social media and those who engage with us on YouTube, etc., are also concerned about the prospects of Bajaj Finance. Talk to us about how both of these charts look to you right now.
Yes, you're absolutely right that the on the basis of their Q3 numbers and the loan estimates which the broking houses have made, it looks like the overall fundamental news flow is also not encouraging. Combined with the price action, I feel that this stock could be under pressure, and even on higher time frames, if you consider, it's been witnessing some steady declines over the past few months. And if it were to give away the recent lows, which is around 6,000, then I see that the price could drop all the way till almost 1,000 points lower. So it's not a very encouraging sign, and a lot of short buildup is happening. And the levels which I'm mentioning could happen if it were unable to hold on to 6,000.
Okay, all right. Moving on then to the next comment. This is coming in from Ayush Jain. He wants to know about the technicals of Mirza International. A lot of small cap names actually popping up on our feed today. So talk to us about Mirza and where it's headed.
Yeah, Mirza International, after its terrific run till September, the correction right now has definitely tread into some good supports around 200 to 220 region. So that's a good demand zone, and as long as that levels are maintained, one could continue to have a stop loss below 190 and take a trade on this on a positional basis, where you could expect a move towards its last high, which is around 375 within the next 6 months.
Okay, fair enough. Funny is asking if one should get into a fresh uh, buy on Hindalco. What's your view there?
Yeah, the entire metal pack, if you are tracking, it's witnessing some steady reaction to the upside. And yes, the commodity space, after witnessing some strong decline, is now seen limping up. But I still feel that there could be some continued pressure which could emerge in these metal names. So I would not be a buyer in Hindalco at the current levels. I will definitely use a reaction towards, say, maybe the region of 420 to 425 to buy into, and consider every metal name more of a intraday play than as a multi-day play.
Okay, all right. The next query that's coming in is from Arun. He wants your view on Latent View Analytics. Now, this company, this stock has seen a good uptick last 2 weeks, adding about 40-45 rupees on the upside. Can it sort of sustain that trajectory?
So, sorry, the entire movement in Latent View has been to the downside, and I believe that the downside could persist. So one should not be an investor in Latent View. It's an avoid from my side.
Okay, how about CAMS? Madhusudan has bought it at 2,300 rupees. He's acquired 50 shares of the company. How's CAMS chart looking?
CAMS has been waxing and waning over the last few sessions, and right now I can see that the revised attempt to go up is also not being witnessing any kind of buying interest. So I would exit this position if I'm holding below 2100, and I'll definitely not be a buyer in CAMS at the moment.
Okay. Tire stocks yesterday were looking very resilient. Of course, the fall in crude oil prices, the correction in synthetic and natural rubber prices is something that's giving confidence to investors. But if we look specifically at Apollo Tyres chart, what does it tell you? We have a query coming in from Sagar on this one.
Yeah, Apollo Tyre is in a terrific run, and it's on a 10-year breakout. So one should look to buy at current levels, use dips towards 300 to 310 zone as an additional buying point, because this stocks looks to be headed towards 600 within the next 1 year.
Okay, great. Moving on to Partha's query, he wants to know about power grid for the next 6 months. Should he stay invested?
See, the energy sector stocks are something which is going to be a laggard. So now, if you're talking about 6 months, the movement in this could be very, very sluggish, because the market itself is going to go through certain events like the budget and now the Q3 numbers. So I don't think that for the next 3 months you would witness any kind of movement in this. It's going to have the similar kind of movement. So within 6 months, you would not expect much trajectory in power grid. So if 6 months is your outlook, then power grid is not the stock.
Okay. Now, another stock, PNB, has almost doubled in the last 6 months. Of course, we've seen a phenomenal upside coming by on most public sector banks. Talk to us about the short-term view on this, as Ashok has posted a query and he wants to know the short-term forecast.
Yeah, PNB has definitely shaken its old regime, and right now, what I feel is that every dip in this stock has to be bought into. So you can see that the dip which we saw towards the end of December saw good buying in. So it clearly states the fact that somewhere in the region of say around 48 to 52 is a good buying zone. So any dip into that region could once again attract some interest. PSU banks are going to have their extended glory in this year as well. So any dips in good names like PNB, Can Bank, Bank of Baroda, plus the Tier 2 PSU banks, all of them are looking quite good. Any pullback in them should be bought into.
Since we're talking about banks, if you could also shed some light on Axis Bank's chart. Vinay is asking if he can buy at current levels.
Axis Bank has given some phenomenal move, and that move looks to extend now further. Yes, it has taken a while, but I feel that this stock is now turning out into a trading as well as a multi-day play. So one should consider and look at this stock from the point of view of some a short-term play. You could expect a target of around 1300 within the next 3 months.
Okay. Raja, would you like to also highlight the stocks that you are keeping on your radar and the ones that are likely to do well as per your reading?
Yeah, so one stock which I would like to highlight is Hero Moto. Hero Moto witnessed some bit of correction, but then after that, I'm looking at it from a positive point of view, and I'm seeing that we saw a good move yesterday. And when you take a look at the entire structure of Hero Moto, I feel that one can participate in this counter at current levels, have a stop loss at around 27.45 for a target of 28.30.
Okay. Is that it, or is there any other stock that you want to flag off?
Yeah, so one stock on the long side, one stock on the short side is what I would like to go into the as the current market scenario. I find that PI industry, after its attempt to move higher, has not been able to make the cut, and it's witnessing continuous supply. So one could look to sell it at around 3320 with a stop at around 3350 towards a target of around 3275 and 3255.
Okay, so a buy on Hero Motocorp and sell on PI Industries is what Raja is recommending at the current juncture. Since we started the show by talking about FMCG and consumption names, any names, Raja, that have caught your attention in the recent past?
Yeah, recently I find that the Havells is attempting a bottoming out formation. So I would be keenly tracking Havells and Bata. Both of them have witnessed some very strong supply. Havells would be first in preference because it has reached a multi-week support low around 1070, and from there has been a steady rebound. So I would look to use that zone at 1070 to 1100 is a very good zone for Havells, and that will be my first preference. And when I talk about Bata, yes, regular attempts have been made to recover from lower level, but Bata, I feel that unless and until it holds a level of around 1600, I would not be tracking it. But then I feel that if 1600 holds, it could be a nice entry into the FMCG space at the current juncture.
Okay, so Bata and Havells are two names from the consumption basket that look good on the technicals, guys. I hope you've taken note of everything and do your thorough research before deciding whether to dive right in or not. On that note, Raja, thank you for joining in and sharing with us your thoughts and observations on the market. And with that, it's a wrap on Morning Trade. Thank you for tuning in.